Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, and I'm recording this late Friday morning as usual on May 5th, Cinco de Mayo. Hope everyone has a fun night, fun weekend. Really, I don't want to come on the videos and write in the letters kind of the same thing week after week, but really the evidence is substantially unchanged. I still see a lot of sort of under the surface positives, I guess I would say, in the sense of the market hasn't gone down here in the last really 6 to 12 months, despite a banking crisis and the Fed and fears of recession and all that sort of thing. We still have a lot of stocks that are setting up. I'm not having trouble filling up my watch list at all. But at the same time, intermediate term, we see much more, washing machine type action. We see selling on strength. And we see a failure to launch, which was this week's title of Growth Investor. Just we're seeing a lot of stocks set up, even indexes set up, resistance, and then selling. They just can't quite get through there. So it just continues to feel like the big investors are, the distribution phase seems to be over. That was last year. But we're kind of almost in this prolonged, ideally, transition phase to a bull market as they wait for some more certainty on the Fed and inflation and interest rates and the economy and all this stuff that's going on, the debt ceiling, that sort of thing. So overall, from a growth perspective, we remain cautious. We're more than 60% cash in Cabot Growth Investors model portfolio. Could do some nibbling here or there. It's not about, just all in the bearish direction. But in terms of any major buying, we just need to see a major change in character from the market and from potential leading stocks. Every few days, it seems like it's kind of on the cusp. It's possible, but we just need to see it consistently to tell us that those big investors are really, piling into stocks after, a year and a half bear market, okay? Now, let's hop into the charts. As usual, I'm using MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com. Here with the same thing, big cap indexes are strongest. Broader indexes are weakest. They're not weak. I mean, financial stocks are weak, regional banks, excuse me. But, for the most part, it's the same story. Here you have the NASDAQ, really nice setup. But even here, you kind of see, even going back to here, you just have this sort of resistance area and it doesn't want to get through there. Now, hey, later today or maybe late Friday or Monday, Tuesday next week, we're up here and a lot of stocks are participating, not just, Apple and Microsoft. That would be really good. Okay. But again, you kind of have to see it to believe it. S&P 500, not quite as strong, but same general thing. Big caps holding up. Not that far from this. Everybody seems to be talking about this 4,200 area. So we'll see what happens. But again, the broader indexes, small caps, this is IWM, can barely get off its knees. Mid caps, a little bit better than that, but same sort of thing, just struggling. And not bad, just kind of, just like I said, washing machine. I mean, just look at the last few days, just up, down, and all around, So if you're sort of a shorter term trader, I think there's opportunities. But other than that, it's like smaller positions, some loose leashes, use support and, take some profits on the way up or at least trail your stop sort of thing because, the moves, even when you catch a sector, tend to persist for, 2-3 weeks. Then they ease. Doesn't mean they're going to fall apart, but they could, and they start to ease and there's rotation. It's just that sort of environment right now. And you can just see, for the growth stuff, I don't want to, again, just say the same thing every week, but, this is the IPO fund. It's not terrible. It's up today, but it's just kind of in this big range. FFTY is the IBD 50 fund. Again, tried to get going, but it's just kind of in this broad range. The IBD Mutual Fund Index, which I like because it's, it's real mutual funds. These guys are getting paid to do, guys and gals getting paid to do their jobs and, they're trying to make money. And here you go. It's just kind of in this, again, range, it's just kind of stuck in the mud. Now, again, it wouldn't take more than, I'm not saying 1 or 2 days would change everything, but it wouldn't take more than a few days of really strong action for, the charts to say, whoa, wow, this looks really good. And the NASDAQ's out to, 10-month highs and the IBD Mutual Fund Index is up to its highest level since last summer, let's just say, if that happens. So it wouldn't take that much to see it happen. But, we said that here and here and back here. We said it back here, so it just has to happen first, really, in my book, okay? And conversely, I am seeing still XLP. I look at this almost every day now. And it's got a great chart, which I don't think is a great news for the market. Not that it has to, I wouldn't mind seeing it come down, but, we're in desperate need for something where in the next 4 weeks, growth stocks are up 5% as a whole, and this thing is flat, that sort of thing, okay? XLV is a little bit different, but it's kind of like big cap, safe pharmaceuticals and stuff like that. You can see it's just showing some relative strength in here in general, while growth stocks sort of chop, after this run here. So still some defensive, still some safety, as I think everyone's just trying to figure out what's the Fed going to do next in every economic report. Okay, so you just got to play it cautiously. This week we did see last week there was a lot of negative reactions. This week we've seen some negative earnings reactions, but again, I am seeing a lot of names look pretty good. It's not easy. They're not going straight up usually. Usually it's kind of still choppy, but there's a lot of names. Like I said, it's not hard to fill the watch list, okay? On the downside, let's see if here, Axcelis Technologies, I wouldn't count this one totally out. This is ACLS. It had a big breakout here. And, you look at this week, you could kind of call it a support week depending how it closes. So I'm not completely taking my eye off of it, but the point is here, it's just kind of done more of this here in the last couple of weeks and reacted negatively recently. Just today is Floor & Decor, which I thought looked really good. I think I mentioned on the video last week, I mentioned it on in Growth Investor last night as a setup. But again, it just kind of comes out, misses earnings estimates a little bit, and the stock is down 5 or 6%. And then even beyond earnings, somebody else reported earnings, and then you have Duolingo got crushed one day. Again, they have earnings next week. So in this environment, which is on again, off again, I don't really want to take my eye totally off of it because a huge earnings positive reaction could have it back near its highs. But again, just kind of abnormal on an intermediate term front. Double Verify, DV, a short report came out. A lot of these things they're not thin in my book, but they're thinner, they're not super liquid. So they're going to be more, apt to get attacked by a short seller or something like that. So we'll see how it goes on earnings, but we're still seeing some of these negative reactions. So it's still kind of a hit or miss environment. All that said, with all that sort of negativity out of the way, we have seen some stuff. This is Uber. What I like about Uber, and I've liked Uber, I've had my eye on it for a while, really since this gap. But you've kind of had this 1, 2, and now it's like, is the third time the charm here, in the sense that business is clearly getting better. They're clearly crushing Lyft. And this, this sort of bottoming base was fine, but, deep. And then I had a few weeks up in a row. And then this just looks much more tighter and well controlled. And of course, we have sort of a massive volume potential blast off here. Obviously, if the market remains choppy, this one had, like I said, had a big run here and then pulled right back. So I think it's going to depend on the market, but I think Uber, it looks like it certainly wants to be a leader if the market can cooperate. Okay, I'll put it that way. HubSpot, not the biggest earnings reaction of all time, percentage-wise. It's a $400 stock. But I've mentioned this a lot, how it just has this kind of nice rounding bottom. Up here, good numbers, huge earnings estimates this year. Still solid sales growth, 27%. And just very tight and well controlled and reacted well to earnings. And it's not really that extended. I'm not going to tell you what to do, but it's not really that extended above the 50-day line. So that looks pretty good. This one I don't know what to do with. I'm just flagging it for you. This is Super Micro Computer. We've mentioned this a few times over the past year. Whoops. Let's see if we can get that back here. Whoops, sorry about that. So, you can see on the weekly chart, it's known for these moves, but it's not early in the run. The stock is up a lot over the past year, number one. But with that said, it did have this big shakeout. It actually pre-announced kind of negative earnings in here. Looked like it was done for, reported the earnings, and maybe it reported pre-announced back here. But either way, it's off to the moon here. I'm not sure I'd be chasing it in this environment, but I am flagging it. It is a ton of volume here, and they do have pretty big earnings and stuff like that. Celsius, I mentioned this in Growth Investor this week. They have earnings next week, but this is a name. This is the energy drink maker. Big picture, it hasn't done anything since it's, a year and a half ago, whenever the bear market started. And again, you're kind of getting a little bit of that Uber where it's like, this is a loose, obviously very deep structure. This is tighter. And this is, I don't want to say tighter because it fell about the same amount, but just more under control. You can just see much more calmer weeks and stuff like that. So, it could be a more proper thing. It's going to come down to earnings, but it's starting to, pick up steam here, even in a tricky market. Martin Marietta, not a super growth stock, but this is sort of a construction aggregate. So, down, you can see it's not a huge volatile name, but down, flattens out, kind of an infrastructure play, almost building, stuff like that. And again, just gets tighter and tighter and tighter. And now we're seeing, I don't want to say letting loose on the upside, but, challenging that sort of round number resistance at 400. Its peer Vulcan also reacted well to earnings. Shake Shack, this was interesting. I haven't been following this. This one's had a lot of false starts over the years because they they kind of never really make money, which is a problem. And you can see it's been the dog's dinner here for a while, but it did bottom out here. And just look at, again, I'm not saying this is like every stock out there, but there's more and more of these names that you look at it and you're like, wow, that's really nice and tight, really low volume. Seems like the sellers have kind of been worn out, sort of thing, and now exploding higher after earnings, and a nice follow through today so far. So that's interesting. Zillow, this is kind of a bottoming base, I guess I'll call it. I'll mention a couple other housing names, but this is sort of a decent housing play. But obviously the stock got destroyed. Had a little bit of an uptrend here, looked pretty good. I think it reacted well to earnings in January, February. Kind of a little base structure in here during the last couple of months, and starting to let loose. If we can go, a couple of days you can see on earnings. Again, one big day and another kind of follow through day. There's resistance. I'm just kind of flagging it for you. OLLI's bargain outlet, OLLI. I think I mentioned this last week, but I just like how it sort of had this earnings here. And again, it saw some selling on strength. Right here, there was the earnings, and it kind of turtled a little bit, but they didn't really keep hitting it. It was just sort of a little bit of selling on strength, and there was no follow on. And then you can see it had a little bit of a volume cluster here a couple of weeks ago, is acting pretty well. On the housing front, one name I did want to mention was Builder's First Source, BLDR. It kind of had this big, structure during the bear market. Obviously, it's been good for the last few months. And again, it's hesitated here. You can see it's, pulled back, but it's respected its moving averages, really reacted well to earnings here. Again, not sure it's a chasing type of environment, but certainly positive action. And then just a couple of more. DraftKings, I'm recording this late Friday morning, like I said, so we'll see if it closes at 25 or 23 or who knows, 27, but looks really good. And it is a good story. It does have good growth. And for those that follow, growth investor, it's kind of a romance sort of transition reality play. And I do like the action here. You're at highest levels here since looks like February 2022. So, 15 months, call it something like that. And then last but not least, this is kind of like sort of like OLLI's. This is Spotify. Turnaround play. I think there's an activist investor involved. So it's a little bit news driven, but acted well. You can see just nice and tight. Tried to gap on earnings, then pulls back. But again, they can't really pull it back much. They did, don't get me wrong, but held support at the 50-day line. Now it's back to kind of new closing highs. Fundamentally, there's probably some stuff left to be desired. But again, you have this sort of prior uptrend, nice and tight. And then eventually, after a couple of wiggles, kind of resuming the uptrend higher after earnings. Okay. So there's stuff out there. I didn't even mention a bunch of names that are on my watch list. That's, but there's a bunch of names out there. And I really do think that while a narrow market is not ideal, one thing I wrote this week is that's usually a topping sign after a big run when people are very bullish. After a big decline and when people are very bearish, it's not as sure of a thing. So maybe the fact that the NASDAQ and the big caps are holding up despite the fact that a top 20 bank is going under once every week or two is a good thing. And if we can start to broaden out and follow through on the upside, I think there will be opportunities. But like I said before, we've said that a few different times here, not just even this year, but even into last year. We're kind of set up, we're there's names to work with, and now we just need to see the big investors, the Fidelities of the world, kind of floor the accelerator so we can do the same. Until then, I still think less is generally more, especially when it comes to growth stocks. Okay, that's all the time I have for today. As always, thanks for listening, and come by again next week for another Cabot review.